So for this project, I'll be looking at 6 mutual funds, 2 international, 2 sector, and 2 domestic. The first international mutual fund is Fidelity International Enhanced Index Fund, which was incepted on December 20th, 2007. So this fund has a portfolio net assets of $1,546.66 million. It has a net asset value of $9.05 with a turnover ratio of 66% and an expense ratio of 0.59%. The beta for this portfolio, for this fund, is 0.97. The R squared is 0.96. The Sharpe ratio is 0.32. And the standard deviation is 10.94. This fund is compared to the benchmark MSCI Europe Australasia Far East Growth Index. And within the last couple of years has been about the same, has been growing at about the same rate as the benchmark. For the year 2017, this fund had a total return of 27.59% with capital gains of 4 cents and dividends of 13 cents. This fund is made up of 99.75% of international equities and 99.75% from developed markets, 0.25% from domestic equities, and 0.71% were allocated towards futures, options, and swaps. The next international mutual fund is Fidelity International Growth Fund, which was incepted on November 1st, 2007. This one has a portfolio net asset of $2,330.16 million, a net asset value of 12.72 with a turnover rate of 36%, and an expense ratio of 1.03%. So compared to the other international, this one has a higher portfolio net asset, a higher net asset value, and a lower turnover rate. However, the expense ratio is also higher. So this mutual fund tends to turn over a lot slower than the other international fund. It has a beta of 0.94, an R squared of 0.94, a Sharpe ratio of 0.36, and a standard deviation of 10.84, which again is pretty similar to the last international fund. This one is also also uses the benchmark of the MSCI Europe Australasia Far East Growth Index and has been performing pretty parallel to that index. This fund had a 29.56% return in 2017, a 2 cent gain, and an 8-cent dividend. And it is made up of 72.67% international equities, 66.47% 6.45% from developed markets and 6.22% from emerging markets. With this one had a little bit more domestic equities involved in it, with a 21.49% being from domestic equities and 5.84% from cash and net other assets. The first sector mutual fund I'm looking at is Fidelity Select Financial Services Portfolio, which was concepted on December 10, 1981. It has a portfolio net asset of $596.10 million, net asset value of $10.55, a turnover ratio of 47%, and an expense ratio of 0.77%. The beta for this fund is 1.12. The R squared is 0.62. The Sharpe ratio is 0.66. And the standard deviation is 13.43. So this sector fund, compared to the international ones, has a lower portfolio net asset, a little bit of a higher net asset value, much lower turnover rate, and a lower expense ratio. So this one is compared to the S&P 500 for a benchmark, and it looks like it's been doing a little under what the S&P 500 has been doing for the past couple of years, for at least 2017. For 2016, it was actually performing a lot higher than the S&P. For 2017, this mutual fund had a total return of 20.94%, capital gains of $4.15, and dividends of 71 cents. This fund is made up of 96.33% of domestic equities, 2.04% of international equities, which all come from developed markets, and 1.63% of cash and net other assets. The next sector mutual fund was Fidelity Select Healthcare Portfolio, which was incepted on July 14, 1981. This one has a portfolio net assets of $7,568.31 million, a net asset value of 25.88, a turnover ratio of 65%, and an expense ratio of 0.73%. So this one had a lot higher of a portfolio net asset and net asset value than the last sector fund. However, it also has a higher turnover rate. The beta is 1.21. R squared is 0.54. The Sharpe ratio is 0.62. And the standard deviation is 15.45. This one's also compared to the S&P 500 and had outperformed the S&P 500 for 2017, but massively underperformed for 2016. For 2017, it had 24.02% of total returns, $5.08 of capital gains, and a 38-cent dividend. This fund is made up of 85.63% of domestic equities, 13.56% of international equities, 11.7% from developed markets, and 1.45% from emerging markets. It had a tax advantage domiciles of 0.41% and cash and net other assets of 0.81%. The first domestic one I had was Fidelity Low Price Stock Fund, which was incepted on December 27, 1989. Which had a portfolio net asset of $32,745.03 million, which is a lot higher than any of the other portfolio net assets we've seen so far. had a net asset value of $49.45, which again was also a lot higher. The turnover rate's 11%, which is the lowest turnover rate we've seen so far, and an expense ratio of 0.62%. The beta is 0.52, the R squared is 0.71, Sharpe ratio is 0.73, and the standard deviation is 9.04. So this one, since it is a larger domestic fund, is compared to the Russell 2000 for its benchmark, and it looks like in 2017 it did outperform the Russell 2000. However, in 2016 it underperformed. In 2017, there was total returns of 20.67%, with capital gains of $6.90 and dividends of 83 cents, which again is, if I'm not mistaken, one of the higher ones we've seen so far. The fund is made up of 60.54% domestic equities and 33.47% international equities. The international equities are 26.88% from developed markets and 6.59% from emerging markets, as well as 0.01% from bonds and 5.98% from cash and net other assets. The last domestic fund I was looking at was Fidelity Blue Chip Value Fund, which was incepted on June 17, 2003. This one has a portfolio net asset of $403.30 million, a net asset value of $19.44, and a turnover rate of 45%, and an expense ratio of 0.70%. The beta is 0.95, the R squared is 0.82, the Sharpe ratio is 0.7, and the standard deviation is 9.81. Since this was a smaller domestic fund, it's compared to the Russell 1000, and comparatively speaking, it outperformed during 2017, but underperformed in 2016, just very similar to the last domestic one we looked at. The total returns for 2017 was 14.87%, which, if I'm not mistaken, is one of the lower returns we've seen so far. The capital gains was $0, which is the lowest capital gains we've seen throughout the other 5 funds. And the dividend was 21 cents. This fund is made up from 77.36 domestic equities, 17.01 from international equities, 13.84% from developed markets, 1.58% from emerging markets, and 1.59% from tax-advantaged domiciles, and 5.63% from cash and net other assets, which tends to be one of the higher ones we've seen with the cash and net other assets.